Arise Asia business correspondent Sandy Huang joins us now from Singapore. Sandy, good morning. So Sandy, what's the latest on Asian markets?
Yes, overall, a pretty happy Monday over here. Most Southeast Asian stocks are higher, with Vietnam leading gains. Singapore shares rose about 0.4%, with industrials and financials leading the charge. Sentiments are also fairly positive down under. The Australian benchmark closed up 0.25%. Shares were pushed up by miners after iron ore prices jumped nearly 3% overnight. But gains were capped by financials. Elsewhere in Japan, the Nikkei ended a 0.6% higher, as chip-related stocks tracked U.S. strength. But broader market gains were also limited, as disappointing export data sparked concerns about weak global demand. And finally, China's major stock indexes closed near 6-month highs today. Sentiments are bolstered by the U.S. Fed meeting and Beijing's policy boost. Consumer firms leading gains on the mainland, with the CSI closing 6% higher. Hong Kong's Hang Seng tracked the mainland markets higher as well and closed up 1.4%, the highest in 9 months. So overall, a pretty strong start to the week here.
Seems like an incredibly strong start to the week. Now, there's a lot of fresh trade data to unpack today. Singapore's exports sharply rebounded from its biggest fall in over 2 years. What does that tell us?
Yes, well, the numbers paint a pretty mixed picture, actually. Singapore's non-oil domestic exports rose 4.9% in February year-on-year, thanks to a surge in exports to China. That's a sharp turnaround, as you said, from a 10% contraction the month before. Exports to Singapore's biggest trade partner, China, jumped 34% on year, rebounding from a 25% contraction. But economists said that an 8% on-year decline in electronics exports means the global demand has not improved. The latest data was also bolstered by shipments of non-monetary gold and pharmaceuticals. The city-state is a big regional player in the gold trade, and exports can be impacted by sharp swings in value. Spot gold hit a 10-month high last month, but the upswings in these volatile sectors did little to reassure economists that Singapore will remain on a tight monetary policy. So we'll find out whether there will be a change at the central bank's policy meeting next month.
Meanwhile, slowing demand seems to be hitting Japan's trade as exports fell for a third straight month. Break down these numbers for us.
Yes, Japan's exports fell 1.2% year-on-year in February, following a sharp 8.4% drop in January. This is due to declines in shipments of semiconductor production equipment and cars. The Bank of Japan last week cut its view on exports and output while keeping policy unchanged. But weakness in exports could mean the policy may shift to more easing, especially as inflation remains well off its 2% target and pressure on businesses and consumers continues to rise. Today's trade data showed exports to China, Japan's top trading partner, rose 5.5% year-on-year, but overall trade to the region remained weak. And Japan's still large surplus with the U.S. is worrying for Japanese policymakers and auto exporters. They fear that Washington may impose hefty duties on its imports. Overall, the data show a sign of growing strain on the trade-reliant economy from slowing external demand.
If we could focus on Malaysia right now, prosecutors there say they are planning to issue summonses to Goldman Sachs in relation to the 1MDB case. Do you have any more details on that case?
Yes, that's right. Malaysia's government last year charged 3 units of Goldman Sachs for misleading investors, saying they made untrue statements and omitting key facts in relation to $6.5 billion of bond issues for state fund 1MDB. But today, only the Singapore unit of Goldman Sachs showed up at a pre-trial hearing in Kuala Lumpur. Malaysian prosecutors say fresh summonses will be served on Goldman's London and Hong Kong offices ahead of the next hearing on June 24. Malaysia says it's seeking up to $7.5 billion in reparations from Goldman Sachs. The bank has denied wrongdoing and said that they were lied to about where these proceeds from the bond sales would go. Goldman's former employee, Roger Ng, was charged last year in December with abetting the bank to provide misleading statements. Tim Lesner, another former Goldman official and Malaysian financial financier Joe Low have also been charged in the U.S. over the alleged theft. Lesnar has pleaded guilty, while Low's whereabouts is still unknown. So it looks like Goldman's legal battle doesn't seem to be ending anytime soon.
And finally, there's apparently some good news for China's tech firms. Shanghai's Nasdaq-style tech board started taking listings applications today. Is that right? What's the scoop on that?
Yes, this is a major reform step for China's capital market. The new Science and Technology Innovation Board focuses on companies in high-tech and strategically emerging sectors. These are next-gen information technology, new energy, and biomedicine, for instance. The review process takes about 3 months, which means the first batch of applicants could debut as early as mid-June. It's a radical shift from the current lengthy and cumbersome process for IPOs. The new registration-based procedure will reduce regulatory red tape and allow fast-growing startups, even unprofitable ones, to list. Chinese President Xi Jinping announced the plan in Shanghai back in November, and it's seen as part of Beijing's efforts to counter U.S. restrictions on China's technology investments, and it's obviously gathered a lot of interest among domestic firms already. Analysts expect about 150 firms to be listed on the board this year, raising up to $14 billion.
Extraordinary. So good talking with you, Sandy. You have a great day now.